Hello, good afternoon. You've tuned into Your Stocks, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much, as always, for tuning in. Quick look at what the market is doing. Just below 26,100 levels as of now. 26,084 is what the Nifty is trading at. Down almost 92 points in the trading session. 88 points, actually, as of now, in the trading session. Now, let's look at what's managing to hold on to some bit of a gain today, broader end of the market. Nifty mid-cap is holding on to 0.2% of gain in the trading session. So yes, the broader end of the market seems to be doing better than what the benchmark indices are doing, right? Though it's also come off the day's highest point, but nonetheless, still, as of now, it's trying to go back up. And Nifty mid-cap is still holding on to that green side. We have Nifty small cap that's also managing to hold on to gains of 0.5%. So watch out for that one. And advanced decline ratio, let's pull that up. Today has been a bit of an interesting day. We've seen a couple of crisscrosses coming in for the advanced decline ratio. As of now, decline, it's more in favor of declines versus advances, but look at it. In the morning also, we've seen a couple of crisscross. Now, clearly a bit more in the favor of declines versus advances, but seems like, again, it's going to be crossing. That's something that we will watch out for in the second half of the trading session. But let's move on and bring on board our guests for today who are here to solve all your stock-related queries. We have Ruchit Jain, Equity Technical Research, Wealth Management, Motilal Oswal Financial Services, as well as Astha Jain, Research Analyst at Securities. Astha, as well as Ruchit, good afternoon. Thank you so much for joining us on the show. Let's start with the queries for today then. The first query is coming from Anil, who is writing to us from Ahmedabad. He is holding 6,781 shares of LIC. Price is 948 rupees per share, making a loss on this one. He's asking, what should he do with this investment? Should he continue to hold it for the long term? Astha, good afternoon. And what's your view on LIC?
So, hi, good afternoon to everyone. View is quite positive, and we are recommending a hold on this counter with a price target of more than 930 to 950 odd levels. Talking about LIC's fundamental seems to be okay, because what we have seen that this company has posted a strong growth. I mean, BNB growth is very, very strong. And with this GST rate cuts, definitely volume-led growth is highly possible for this company, and that will help company in posting a good set of numbers going ahead. So yes, LIC is looking good to us, recommending a hold with a price target of 935 to 950.
Okay, surely 935 to 950 is a target price that you're talking about for LIC as well, and a hold that's coming on the fundamentals front. But on the technicals, Ruchit, good afternoon, and what should one be doing with LIC?
Yeah, hi, very good afternoon. Well, technically, it seems to be in a consolidation phase. Last 4 months, the stock has traded within this broad range of 820, 830 on the low side and 920 on the higher side. So I think it's more of a time-wise correction which is going on in the stock. But the good thing is that post the recent correction from the highs, the stock is trading quite close to its weekly 200 EMA support. So price-wise downside seems to be limited from here on. Wait for a pullback move towards 920 kind of levels. If you see the stock over there, then take a review over there. But at current levels, I would recommend to hold on the existing positions.
Okay, hold on to that existing position for LIC on the fundamentals and the technical front. Next query for today, let's move on to that. We have Amrit, who's writing to us from Chandigarh. He's holding 500 shares of IndusInd Bank, and this is at a price of 1,400 rupees per share. Long-term investor wants to know whether to hold or to sell at the current levels. He's got it at 1,400, so he's making a bit of a loss on this one. Astha, your view for IndusInd?
So view here is to stay invested in this counter, at least for the cost price, because our targets are matching with the cost price. We are giving a target of around 1,040, 1,050 on this counter. So recommending a hold and wait for this investment. Now, talking about the fundamentals of this bank, I say fundamentals seems to be okay, because what we have seen that there are certain MFI provisions which has created some sort of pressure in the financial performance. But I think going ahead, definitely with the kind of strong capital buffer this company is having, I mean to say this bank is having as of now. So that will really help the bank in posting good set of numbers. This is what we believe. And we also believe that now under the new leadership, definitely this bank will show some good performance going ahead. Maybe not in the short term, but yes, in the long term. So we are really keeping our fingers crossed for all these factors, and hence recommending a hold with a price target of 1,035 to 1,050.
Okay, thanks for that level over there. But on the technical front, Ruchit, IndusInd Bank, does it become a bet maybe to average? And what is the target price that you're giving as well?
Well, if you look at the stock and compare it to other private sector banks, it has been a huge underperformer. However, of late, we have seen some pullback move over last 2.5 months, and the stock is respecting its 50 DMA in this period. So, which is now around 840. So, at 840, 830 remains a very crucial support for the stock. Till this is intact, I would recommend to hold on the existing positions and keep a stop loss below 830 on existing positions, but won't recommend to do any kind of averaging over here. Relatively, if any fresh funds has to be put, then I think there are much better options available in the private sector bank itself, such stocks such as ICICI Bank, where I think post the correction, the stock is now resuming its broader uptrend. So if you have to put any fresh money, then go with ICICI Bank. But in IndusInd Bank, you can wait for a pullback move towards 1,000 rupees.
Okay. We'll wait out for those levels over there for IndusInd Bank. Let's move on to the next query for today. We have Nagraj who's writing to us from Bangalore. He's holding 9,000 shares of Lemon Tree Hotels. Price is 128 rupees per share, making it a profit on this one. Should he continue to hold this for the long term? Astha, what's your view for Lemon Tree Hotels? Today we had a brokerage note that came in for Indian Hotels, which is a bit of a downgrade. But overall, for Lemon Tree Hotels, long-term view is good, or should they switch to some other name?
I think long-term view is also good, so there is no harm in staying invested in this counter. But what I believe is that we have already seen a very, very strong set of numbers from this counter in the quarter gone by, and their revenue, we have seen a very strong jump. And there were certain reasons behind it. But going ahead, what I believe is that we really need to look how this season pan out to be for this hotel company. And hence, our idea here is to stay cautious, just book partial profit, not fully profit. We are fully booking, we are recommending at this point of a time. So just book partial quantity, and then remain invested in the partial quantity with a price target of more than, because right now what we believe that 147 is such a level where the investor is already earning profit. So stay invested in the partial quantity with the price target of 170.
Okay. And Ruchit, what's your view for Lemon Tree Hotels? What are the levels that one should keep an eye out on? Should they continue to hold? And are you expecting some bit of an up move?
So the near-term trend seems more of a consolidation or sideways move only. Hotels is a space, if we can see that last 2-3 months have not participated in this broader market pullback move that we have seen. 140 is the crucial support for Lemon Tree Hotels. If that gets breached, then probably that would change the near short to medium term trend for the stock. So I would advise to keep a strict stop loss below 140. If that gets breached, then take an exit.
Okay. We'll keep an eye out on those levels over there for Lemon Tree. Let's move on. Next query for today is coming from Venkat from Hyderabad, who's saying that he's holding 2,380 shares of IRFC. This is at a price of 161 rupees per share. So they're making a loss on this one. What should he be doing with this? Should they continue to stay invested, average? What's your view, Astha?
I believe that one should stay invested in this counter at this point of the time. So my idea here is to just hold this counter, because we all know that this is a Navratna basically company, and CPSC, and it falls under Ministry of Railways. Now, what is major positive about this counter is that we believe that this budget may be it may be prove a positive budget for the railways stocks and railways companies, and in turn will definitely be benefiting IRFC. So our idea here is to stay invested in this counter, and let's wait for the budget as well as results. So hold is a strategy which we are recommending for this counter with a price target of 140 to 150 at the initial levels.
Okay, we'll keep an eye out on those levels over there. And Ruchit, your levels that one should keep an eye out on, and near term, will it at least come to the buy price of the year?
Yes, I think it makes sense to hold on. We have already seen a significant underperformance in the railway stock. The price-wise as well as time-wise corrective phase has been done. Of late, last 2 or 3 weeks, we have seen a good buying interest in many of the railway names where up moves are supported by good volumes. So this should lead to a pullback move towards 145, 150 range, at least in the short term. So continue to hold your existing positions. I think at current levels, even if you want to average out and buy more, you can add more positions at current levels so that your cost price would come down.
Okay. Surely we'll keep an eye out on that. Could add maybe some bit of a position right now, given that your cost price could come down. Thanks so much for that. But on that note, we're actually going to sip into a very short break. But just a quick heads up for our viewers. If you are thinking about where the real opportunities for 2026 lie, Market Forum, the Alpha Generators for 2026 is where that conversation begins. The Alpha table awaits, and join CNBC TV18 as we host the ultimate confluence of India's market movers. Tune in on the 13th of Jan, Tuesday, 4:30 p.m. onwards, only on CNBC TV18. Welcome back to Your Stocks on CNBC TV18. We still have with us Ruchit Jain as well as Astha Jain to answer all those stock-related queries. Let's keep it going then. The next query for today is come from Dushyant Patel, who's writing to us from Surat. He's holding 400 shares of NTPC. Price is 328 rupees per share. Right now, making a little bit of profit on this one. He's asking if they should continue to hold this or sell at the current levels with that little profit that they're making. Astha?
So my idea here is to stay invested in this counter for the price target of around 370. Now, talking about the NTPC, we believe that whatever management has given in their commentary, I think that is really looking very, very optimistic because they have a vision to become a group capacity of around 244 gigawatt by, I suppose, 2037. So I think that is a strong, strong vision to believe on. And medium-term capacity additions are also there. So with this capacity addition, we believe that NTPC is going to benefit in their financials also in the longer term. So stay invested in the NTPC. Here, short-term price targets can be set at somewhere around 370 odd levels.
Okay, and Ruchit, your view for NTPC, last 1 month the stock is up almost 7-8%. What should they do now?
It makes sense to hold on. Already the stock has gone through a decent time-wise corrective phase, and now the stock seems to be showing some positive momentum since last few days. The price up moves are supported by rising volumes, so the stock has potential to rally towards 360, 365 or 370 in the near term. So hold on your existing longs. Maybe if it comes around that higher end of the range, you can take a review again over there.
Okay, we'll keep an eye out. Hold on to it right now. That's a word on the technical front. Next query for today, we have Jai Kishan, who's writing to us from Mumbai. Now, he's holding 78 shares of GMM Pfaudler. This is at a price of 1,652 rupees. So they're making a loss right now. Future prospects of GMM Pfaudler. Astha, your view on the fundamentals for this company?
So what we are seeing is that now the financial performance is showing some sort of improvement, and that is basically from the company's non-glass line business. So that is the major highlight of that. Now that segment has started performing very strongly. In fact, their current order book is also very, very strong, and their current order backlog stands somewhere at around 2,146 crore, if I'm right with my figures. So I believe that this counter has started showing some sort of improvement in their financial performance, and as we should give a chance to it. So my idea here is to stay invested in this counter with a price target of 1,200.
Okay, stay invested with a price target of 1,200. Ruchit, what's your view for GMM Pfaudler? Should the viewer continue to hold the stock, average, short-term as well as long-term view? I beg your pardon.
So, well, the near-term trend does not look that positive for the stock. The stock has been into a consolidation phase since long time. It's only the thing is that 1,990 has been a support, and the stock is trading quite close to those levels. But on pullback moves, the 200 DMA resistance is immediately around 1160, 1170. So I think the upside seems to be limited. Keep a sell on rise approach. Do not average. In case if you see any pullback moves from here on at high levels, I think one should not look to take an exit from this.
Okay. That's a view there on the technicals. Let's move on then. Next query, we have Satish, who's writing to us from Hyderabad. He's holding 1,000 shares of PROLL. He wants to know the future prospects of the company. PROLL, Astha, your view, not a one that we talk regularly about it, but and a query that's coming here from the viewer.
So I think now the management is looking to be very, very optimistic because what price targets I'm sorry, what revenue targets they have set for this company is around 80 billion of the revenue by FY30. So that seems to be very, very strong. We believe that with such kind of revenue targets and the strong vision, this stock is well poised to move more side from here, and hence recommending a hold with the price target of 720 to 750.
And Ruchit, on the technicals?
There's a high top, high bottom structure on the daily chart, which is a good sign. So can hold on existing position, but just because of the overbought setups, a near-term consolidation cannot be ruled out. But the good thing is that on any corrections, the stock is forming a support base around its 50 DEMA, which is now around 610 kind of levels. So till it is above 600, I don't think there is much need to worry. Only on the existing position, only if it breaks 600, then take a review again.
Okay. Only if it breaks 600, then take a review again. That's a view on the technicals. Next query then for today, that's coming from Gopal Krishnan, who's writing to us from Tamil Nadu. He's holding 1,000 shares of Root Mobile. Price is 1,400 rupees per share, so they're making a loss on this one. The other one they're holding is Park Hotels, 3,000 shares there at a price of 170 rupees. Here also they're making a loss. So both of these counters, they're making a loss on this one. Astha, should they continue to hold Root Mobile and Park Hotels, sell, average? What is the option here?
I would like to recommend a hold. Now, talking about the Root Mobile, yes, we know that the financial performance was not very, very excited because what we have seen is that their financial growth was a decent one with around 8% revenue growth. But now they are focusing more on the strong customer mix, etc. So I think that all will help the company in the future financial performance, maybe 2 to 3 quarters down the line. So that is one of the case that makes this investment a long-term investment rather than a short-term investment. So if anyone has a long-term view on this counter, then one should remain invested. However, here the cost price is very, very high. So my idea here is to just wait for the numbers, at least for the Q3 of FY26, and then make any sort of decision. Right now, hold this counter. Initial price target can be set at somewhere around 750 odd levels.
And Park Hotels?
Yeah, Park Hotels is also a holder from our side. So what we recommend on Park Hotel is it is just a hold because their financial performance was in line with the expectation, and going ahead also their occupancies have rose. So I think that is the major point. And now the management is also aspired to achieve double-digit revenue growth going ahead. So with this kind of confidence, it is a strong hold from our side. Even buy on dip strategy can also be applied to this counter. So for Park Hotel, it is a hold as well as buy on dips with a price target of 150 to 160.
Okay. And Ruchit, your view for both these names. The viewer is making a loss on both these counters. Park Hotels as well as Root Mobile is averaging an option.
Well, both the stocks are in a downtrend, and it's not just the downtrend. They have been showing a significant underperformance to the broader markets. So I think when you see any stocks which are not performing when the markets are going up, better not to do everything in those stocks. So take pullback moves as an opportunity to exit from these names, but certainly not. It would not be advisable to put any fresh money at current levels also.
Okay. Let's move on then to the next query. We have Ashish Sawant, who's writing to us from Mumbai, wants to know the entry price for Brainbees solution from a valuation perspective as well as a technical perspective. He's a long-term investor. Astha, your view for this one.
So I believe for the Brainbees, here the investor wants to know about the entry price. So I believe right now, from the valuation perspective, it is little bit overpriced. So it's better to enter at the price level of around 250 to 260 odd levels. This is what we believe. This counter is looking strong in the longer term. However, in the short term, because results were not that much excited and valuations are still at this higher level. So I believe if some correction comes, then it's a better entry point. So 250 to 260 are those levels where we are expecting this counter to be a good entry bet.
Okay. Ruchit, what's your view for Brainbees, right? Because in the last 1 year, the stock is down 53%. Should one still wait technically? Or can they look at to buy at this level or start adding at this level?
Post listing, the stock has consistently formed that low top, low bottom structure. I think somewhere in August 24, August 2024, the stock listed around 700, and since then we have not seen any kind of uptrend signs. So I would suggest that rather than looking at what price you should buy, wait for some trend reversal formations or good price volume action happening in the stock, where no buying interest comes in. Then only look to enter stocks which are showing such huge underperformance. But for now, there are no signs of trend reversal, so better to stay out.
Okay, no signs of trend reversals as of now coming in, so it's better to stay out of Brainbees solutions. So that's a word there on this one. But Ruchit as well as Astha, thank you so much for joining us, as always, helping our viewers answer all those stock-related queries. And viewers, thank you so much for sending us those queries as well. But a quick check in terms of the market, still 26,090 around that level is what the Nifty continues to trade at, down 0.3% in the trading session. Came off the day's high, came off the day's low, slight bit of a recovery from the day's low is what we could say right now. But, where it's going to be headed, that will be important to watch out for, and whether those advanced decline lines actually crisscross again and we see a bit of a change there, that will be something to watch out for, because today declines are in the favor of advances as of now, though that line is nearing. Let's watch out for that. Broader end of the market continues to do well. IT, that is also continuing to do well. So yes, important sectors to keep an eye out on, along with the metals pack that continue to shine. But with that, we're absolutely out of time on this edition of Your Stocks. Remember, you can always send us the query on the email address that is there, as well as the phone number that is flashing at the top of the screens for you all as well. That will be there. And you can also send us your mutual fund related queries on this phone number as well. But with that, thank you so much for tuning in. Up next, you have Closing Bell to take you through the last hour of trade.